welcome everyone to Asia Aviation, the first quarter digital roadshow. First, let me introduce our speaker here. On my left-hand side, Mr. Siripop Pakatananan, our Senior Manager Investor Relations, and myself, Mr. Shalat Nontipanantasakun, Assistant Manager Investor Relations. So let me start with the operating and financial performance of our company. If you look at our company key performance in the first quarter, for the first quarter, our overall performance show several interesting trends. We continue to focus on expanding our domestic market, driven by the strong domestic travel demand. On the other hand, the international market, which show a weakening trend due to the decrease in Chinese tourist arrival. So overall, we serve approximately 5.6 million passengers, an increase of 2% year on year. This growth was primarily driven by a 9% increase in domestic passenger, while international passenger decreased by 9% also. As a result, the proportion of domestic passenger rose to 67% of our total passenger, compared to 62 in the first quarter last year. Our overall load factor stood at 87%. Domestic route performed well with a load factor exceeding 90%, while international route were at 81%. The aircraft utilization was 12.7 hours per day per aircraft. Our ASK also grew by 7% year on year, reaching approximately 6,700 million, aligned with a 7% increase in flight to about 35,000 sectors. Regarding our on-time performance, there was a slight decline due to some fleet management and maintenance issues, but we have made our best effort to manage this and to best take care of our passenger. The average fare for this quarter was 1,945 baht, an increase of 8%, and 8% decrease year on year. This was mainly due to a really high base in the first quarter of last year, which we saw high tourism demand. Meanwhile, ancillary revenue per passenger was approximately 430 baht, similar to last year. On the fleet size, we have a total of 61 aircraft at the end of the quarter, with 55 aircraft in operation, up from 50 last year. We also took delivery of one new A321neo this quarter. So next, let's look at the detail of our financial performance. Our total revenue was approximately 13.2 billion baht, which is similar to the fourth quarter last year, but down 4% year on year. This was mainly due to the weaker international market demand and the high base of fare during the same period last year, as I mentioned earlier. However, our EBITDA remains strong at approximately 3,300 million baht, similar to the fourth quarter and up around 8% year on year. So this resulted in an EBITDA margin of around 25%. So it's a significant positive factor for this quarter was the decrease in fuel price. So this positively helped our cost management. All in all, we report a net profit of 1,387 million baht. If we exclude the special item like FX gain, our core profit was around 1,300 million baht. So we can see a growth of 6% year on year, which is considered as a satisfactory result. So next, to better understand our revenue structure, let's look at the revenue structure for this quarter. The ticket revenue decreased by about 6% year on year. However, ancillary revenue continued to grow well at 3% year on year. Other income was partly derived from the FX gain in this quarter. When comparing the total revenue quarter on quarter, the numbers are quite stable. Another key factor that affects the revenue is the average fare. As I mentioned, the previous year has a really high base from the really high travel demand, both domestic and international. So overall, the average fare decreased by 8% year on year from 2,100 baht each to 1,945 baht. Looking at looking at domestic route, the average fare in the first quarter last year was as high as around 1,600 baht. This year is gradually decreased to 1,517 baht, which is still a satisfactory level and still above 1,500 baht. While the average fare for the international route decreased about 100 baht to 2,800 baht each. This decline is a result of the overall tourism situation that still not being very strong, especially from the Chinese market. So passenger number continue to grow. We still see an increasing from the fourth quarter and up around 2% year on year, which is consistent with our capacity increase. Beyond ticket revenue, ancillary product and services are also our significant contributors. Our main revenue driver here remain the same: baggage and seat selection services. These two segments grew by 7% and 5% respectively. Now let's turn to the cost side. A key factor was the significant 19% year-on-year decrease in fuel costs, which resulting from the lower global oil price. Staff costs increased in line with the fleet expansion. Maintenance costs were well managed and close to the last year level. Even we have the expanded fleet. Other operating costs increased in line with capacity, which indicate our efficient internal cost control. And SG&A increased by about 33% year on year, partly due to the investment in marketing campaign this year. However, if we compare the fourth quarter to the first quarter, SG&A are quite similar, as we manage our marketing budget on an annual basis. Looking at this cost to our unit metric, to give you a clearer picture, the revenue per SK or RASK was 1.97 baht, down from 2.2 baht last year, which was a result of a high base in the previous year. However, comparing the fourth quarter to the first quarter, it is very similar level. our cost per SK excluding fuel decreased by 3% year-on-year from 1.16 baht last year to 1.13 baht this year. This reflects our good control over other cost components apart from fuel. In terms of margin, we maintain strong profitability. We continue to perform well from the first quarter, which is typically our strongest quarter. If we compare the margin in the first quarter this year to the last year, it's improved from 22% to 25%. This partly supported by lower fuel costs. And regarding finance costs, they were quite flat quarter-on-quarter, but higher year-on-year. This was due to the fundraising from the bond issue and in the past year, relating to an increased interest expense, as well as the additional of new aircraft that we received during the past year, which also increased depreciation and also the aircraft-related interest costs. So in summary, our core profit was approximately 1,300 baht, with an effect gain of about 100 million baht. So at the end of quarter, we report the total net profit of 1,387 million baht. Finally, for the first part, let's look at our financial position from the balance sheet and cash flow. The debt to equity ratio remains stable at 0.8 times. Our total liability may have increased slightly due to the expansion of our fleet compared to last year. Look at the right-hand side, the cash flow this quarter, we experienced a negative operating cash flow of approximately 670 million baht. This was mainly due to a slowdown in passenger advance booking, with a trend that passenger may have a shorter booking period. However, we expect this situation to improve in the second quarter and the third quarter onward. And we believe that it remains within our manageable range for us. So that is the first part of the presentation. So let me turn the stage to Mr. Siripop for the business update.
Thank you very much. Good morning, everyone. Thanks for tuning in. So I'll be covering two parts. The first one is on business update, and the second one is on the outlook. For those of you who are not very familiar with Thai AirAsia and also not very familiar to the Thailand tourism industry as a whole, I would like to start off with this kind of very big picture statistics about the international tourist arrivals to Thailand. So if we look at the left-hand side, right, this show the number of tourist arrivals on a monthly basis for each particular year. If we were to focus on 2025, which is the red line, and 2024, which is the black line, you will see that actually we started off the year at a very high level and high and strong momentum of international arrivals. So we welcomed 3.7 million people overall, and it was actually a comparable level to what we saw in 2019, pre-COVID. The trend from January down to April has been a downward trend, which was a correct trend if you look for the past 3-4 years on the graph. However, the steep decline was a little bit too deep, per our expectation and also other the authorities' expectation as well. And as Chalatnon mentioned earlier, mainly the reasons was from a decline in the Chinese tourists. So if we were to look on the right-hand side, now we show the top 10 arrivals by nationality. So you would see that actually 7 out of 10 nationalities came in more to Thailand than last year. We talk about Russia, 16% growth year on year, India, a solid growth of 15%, Japan as well, last year There were less this year. They grew 17%. Only China, which we saw 24% drop year on year. Malaysians were flat, and Korean down by 11%. So if we carve out that Chinese kind of weak sentiment, actually the tourist arrivals in general remain to be quite all right in the first quarter. But I mean, as the trend has been like this, maybe it's a little bit more challenging to the target of the tourism authorities of Thailand, that they are now projecting 39 million people this year. I've been hearing unofficially that this target might come down to a level similar to last year, somewhere between 35 to 36 million. But let's see. So this is the overall of how the market has been. Next one, coming back to Thai AirAsia, I would need to say that what happened on the previous page about international arrivals may not 100% fully reflect the performance of Thai AirAsia. If you look on the slide, actually on the right-hand side, 66% of the capacity, which means seats service in the market, we are servicing them to the domestic market, and the rest 34% for international. So the domestic market, which I'll elaborate later on, has been quite all right in the first quarter. We continue to see growth in terms of the numbers of people in the units of millions and times, growing maybe somewhere around mid-single digit level. A little bit different story from the international arrivals. On the left-hand side, we normally show what we are going to deploy in terms of capacity for each quarter. So the first quarter we passed already. We served around 6.4 million seats, which grew around 10%. Operating aircraft were at 55 aircraft. And if you look at the second and third quarter, which this is our latest kind of revision. If you sum those quarters up, you will see that there's a reallocation between the international markets, which might come down to the domestic market, which will go up, kind of reflecting what we are viewing the situation in terms of the tourism overall and our performance at the current stage. For the fourth quarter, we remain to view that it's going to be a high seasonal, high demand quarter as usual. And we target to operate around 63 aircraft by the end of the year. We'll talk about the fleet later. But again, just to emphasize on the right-hand side, you will see that apart from the 66% domestic capacity allocation, another big portion is on ASEAN, 17%. And then the rest, South Asia, East Asia, excluding China, and China itself, we are allocating around 5 to 6% to each market. So our exposure actually to the China market currently in terms of capacity is down to 5%. And in terms of revenue, first quarter we had the revenue proportion from the Chinese tourists at around 10%. So the exposure has been down from pre-COVID quite heavily already. And we've been communicating with investors since I think second half of last year that we started to see a weak demand from the Chinese arrivals, and we haven't been aggressively expanding capacity in the market. We've been on the more of the cautious mode, and we'll continue to do so. So that's the fleet, that's the capacity deployment plan. Next up is on normally when we talk about strategies, we would talk domestic and international separately. So this page especially talks about how we are going to capture the demand in domestic market. So big picture this year will utilize our central Bangkok hubs, which we have two hubs, one in Don Mueang, DMK, our main office here, and the other one is at Suvarnabhumi or BKK. We'll use both of them more competitively this year. So in the past, Don Mueang has been our kind of major domestic hub. We have another hub in the north in Chiang Mai, CNX, and in the south, Phuket, HKT, and then the two central Bangkok, Don Mueang and Suvarnabhumi. So rationality, the reasons behind our expansion into BKK was number one, Actually, if we see the growth of domestic flights, it's been more on the Suvarnabhumi airport because Don Mueang has been almost full. Some capacity remains to be expandable, but is more limited compared to what we are seeing at Suvarnabhumi. Overall, we are seeing more actually previously international arrivals coming and travel not only in Bangkok, but they also took more domestic flights and visited other cities like Chiang Mai, Phuket, and elsewhere. So that's we are seeing more increasing proportion of the foreigners doing something like that. Margin-wise, domestic compared to international in terms of the unit margin, when we look at the RASK and CASK, domestic has been superior to the international as well. So it makes a lot of sense for us to expand into BKK for this year. And you look on the middle box on the very top, kudos to the team actually that we just recorded the historical high of market share domestically at 42%. Compared to pre-COVID, we were hovering around 1/3 of the market. But with the structural shift during the past 4-5 years and what we've been doing and our strategies for each market, we've been gaining market share and right now standing at 42%. We also show routes that we expanded for BKK, 2 routes in the first quarter and 3 new routes coming up. Load factor wise for BKK itself has also been very strong. We saw 89% for overall BKK routes and 88% for the newly opened routes as well. On the right hand side, we show is the entire domestic statistics. So the load factor comparing year on year and Q on Q remain to be quite high, 91%. Average fare, as we mentioned, if it's still above 1,500 baht mark, we believe it's still a healthy kind of fare level for the domestic. Next is international markets. As we've been discussing, China has been weak, and capacity-wise, we actually dropped or lowered our capacity to China by 5% from last year. And again, remain to be cautious in terms of additional expansion. East Asia, excluding China, we saw a slight decline of 5% as well. Mainly, this was from, I would say it's a mirror kind of behavior in Hong Kong, Macau, and nowadays Taiwan, mirroring what's happening in China, right? So capacity-wise, it was a decline of 5%. But interesting thing is that we actually have been seeing new opportunities to capitalize what we call the Fifth Freedom rights, which allows us to fly out from Thailand and stop at the second destination, unload and reload passengers, and then fly them to the third destination. So this is called Fifth Freedom routes, right? So we've been running 2 routes since last year from Don Mueang to Taipei in Taiwan and to Okinawa in Japan. And the other one is from Don Mueang to Kaohsiung, Taiwan as well, to Narita, Tokyo in Japan. So those second and third destinations are in the East Asia market, right? And we continue to see quite robust performance in terms of yield and in terms of margin from those routes. We'll continue to expand more. Actually, we started to open sales for the Chiang Mai, Taipei, and Chitose, which is the Sapporo in the very north of Japan as well. So that's East Asia market overall. ASEAN, we saw a decline of 4%. Mainly, we optimized some seats to Singapore and Malaysia. But overall, you see the load factor has been the highest among the international markets, which reflected quite a healthy market still. So overall, 10 countries in ASEAN, excluding Thailand, would be 9. We are flying actually 7 out of 9 countries, and 3 out of 7 countries, Vietnam, Cambodia, and Laos, we are actually the leader, commanding #1 market share to transport in terms of air travel between Thailand and that particular destination. South Asia, mainly India, we have added around 40% capacity from last year. So this is to reflect our view that India has been a growing market. Higher competition, yes, but we think in terms of the performance, in terms of load factor that we keep monitoring, overall it's still a growing market, and we'll continue to kind of optimize. We might have seen some weakness in fare because we increased quite a lot of capacities, but overall it's still a growing market. Load factor wise, on the right hand side, down a little bit to 81%, but average fare for the first quarter remained to be at 2,800, which remained to be on the high side of the fare level. On the fleet, at the end of the first quarter, we had 61 aircraft overall. At present, we have 62 after receiving one more A321neo in April. By the end of this year, according to the plan, we'll be receiving four more A321 aircraft neos. We remain to confirm the order because looking for high seasonal fourth quarter as well as the first quarter of next year and long term, we believe that securing aircraft at this point in time, if it doesn't kind of compromise too much on our financial health, it would be a prudent strategy to seek more aircraft during this environment of the aircraft constraint. So on the right hand side, we show that according to our research, by the end of this year, our fleet will command around 34% of the industry's narrow body fleet. So remain to be number one, similar to our market share that we just showed earlier. In terms of outlook, so we'd like to start off with, actually all of these are known facts in the market, but we would like to elaborate what's happening to the numbers. So maybe I'll start off with the middle one in terms of earthquake. So the earthquake occurred at the end of March, right? And the impact actually was covering around 2 to 3 weeks, first weeks of April. So you see that the load factor for the domestic market has dropped during those few weeks, but now is already recovered up to a normal level of close to 90%. So we would consider or evaluate this one-time earthquake as short-lived for now. Everything is quite resolved already, and overall the impact that we see in terms of construction and the sentiment has been quite relieved already. On the left-hand side, in terms of the soft and weak China market, I think in a few weeks' time, maybe not later than mid of June, we'll see more clarity from the government in terms of several measures and stimuli that they're planning. We've been hearing some of them already. Overall, there's going to be some amount of budgets to help kind of incentivize the demand, and the activities throughout the tourism chain, which include hotels, restaurants, and also airline. We are not too sure already if it's going to be a direct subsidy or maybe some indirect measures but let's see. There's going to be more to come. But overall, in terms of our flights to China, we've decreased the number of flights to now 70 flights a week, which is actually a 50% decline from what we flew earlier pre-COVID. And the last one on the right-hand side, in terms of the US tariff imposition, I think everyone agrees that it's very difficult to kind of predict or evaluate the final outcome out of this still uncertain situations, right? And we are still in the middle of the 90-day pause. But of course, short term, again, I think everyone agrees that we started to see kind of lower purchasing power and sentiment in the market in the real sectors already. GDP has been revised down by almost all of the houses out there. So for what we can say right now, the upside has been on the lower fuel price. and it already reflected in the first quarter. At the current level of jet fuel around $80 per barrel, we started to hedge some fuel already. Actually, we've been hedged or locking the price around 10% of the consumption that we'll target to use in the second quarter. CFO just mentioned yesterday that we are actually putting more orders into the market, but we are waiting for the market, the positions to be matched. And also we have been seeing the weaker US dollar and appreciating Thai baht that helps us in terms of cash outflow regarding the aircraft lease and the maintenance expenses that we need to pay in the US dollars term. Downsides, reduced travel demand, but this remains to be seen. And due to these uncertainties during this short kind of 6 months, 3 months, 6 months time, we on the next page would like to reserve our kind of reassessment to revisit our guidance again when the next quarterly results come. So we've been giving out the revenue growth for this year, mid-teens growth, which reflects a range of maybe 13 to 17%, or if we are more flexible, it also includes 12% or up to 18% as well. We also given out the guest number, 24 million passengers this year, a load factor of near 90%. And the most important one is to maintain the profitability in terms of EBITDA margin to at least similar to last year, which we achieved 21%. So at this point in time, apart from the revenue growth target, I would suppose that other metrics have a high chance to meet this year regarding whatever outcome the situation might unfold in the next 3 to 6 months time. But for revenue growth, if you look on the left-hand side, especially in March and April, we actually saw some shortfall from what we expected earlier. So that's why I said that we would like to reserve a reassessment in terms of the growth for the next quarter. Yeah, and that's the outlook. Maybe more questions and then we can elaborate further on. Lastly, on sustainability. So we continue to do this very strongly. Our board of directors very buy-in with the sustainability, and the most important one and the most communicated one is on the net zero by 2050, right? So we have the team here. We have a full-time manager and team looking after sustainability. So the team keep the momentum in terms of creating the awareness both internally and externally. The first quarter in particular, we also started the human rights risk assessment to uplift the standard of human rights in the company. The Journey D, the middle one, this is more than a CSR kind of campaign. So we and team with our partners outside also go to visit local communities. The first quarter, we visited Lampang for the first time, help the people in the community to kind of develop plans to make the city or province to be more sustainable touristic destination. So a lot of knowledge sharings, a lot of sessions going on for each quarter. We also received an award from this one, Future Trends, on the social products as well. So this is the highlights that we would like to pass on to you.